Welcome to Fiscal Integrity Group, your ticket to bookkeeping greatness. Hello and welcome to our Knowledge Nugget on allowable write-offs. I'm Herb Holst. For starters, you need to be aware that what we're talking about are deductions from business income to arrive at a bottom line, and hopefully the lowest bottom line that you will have to pay taxes on. Deductions or write-offs are allowed by government. They're generally set by government in the jurisdiction to which they apply or where the business operates. This brings me to my first point. What is allowed will vary by jurisdiction. Just when I say something is allowed across the board, somebody will prove me wrong and saying, well, my area, it's not. So you have to be very, very conscious of this. You need to become familiar with your own situation and the laws that apply in your area. And these laws do change, so it's not just a matter of learning them once and then saying, okay, well, it's good for the duration. You got to stay current because governments do have a habit of changing things around on you, and you're expected to know about the changes. As the saying goes, ignorance is no excuse. You must be knowledgeable as to what is acceptable and what is current. Governments and taxation agencies are not interested in you not being up to speed. The result could be interest and penalties that are levied against you if you get it wrong. In most cases, you can go to the government's online website to find out what's allowed and what's not allowed. In our situation here in Canada, that would be Canada Revenue Agency. I'm sure that there are equivalent websites and agencies that you can get this information from in your own area. It has very detailed information as far as these things go, at least Canada Revenue Agency's website does. Now, what I'm going to offer here are, in this knowledge nugget, are guidelines only. Again, because of the potential for changes between jurisdictions or differences. Make no mistake about it, dealing with tax legislation is one of the most difficult things you'll probably be dealing with as bookkeepers, or what you could face. The true litmus test will be if your company ever gets audited by a government agency or whatever, will your books stand up? Now, if you're a contract or freelance bookkeeper, you'll often get asked by owners or managers as to what is allowed because they just plain don't know, especially if it's something that's a little bit out of the ordinary. They'll be coming to you for that advice as to whether or not it's allowed as a write-off or not. Will you be able to answer? Everyone in business wants to pay the least amount of taxes that they can get away with, which is fine, and that equates to making sure that you take advantage of every possible write-off or deduction. Let's have a closer look at what constitutes allowable write-offs and what you need to consider as a bookkeeper or from the bookkeeping end. We need to start with a disclaimer, of course. What is offered here are really just guidelines. There's only one way we can do that, and that's to offer guidelines. You really need to cross-check and verify that what is correct in your particular jurisdiction is correct. You need to do your research, and you need to, if necessary, ask your accountant for a ruling if you wish. And if the accountant's not able to do that, you may have to go to the government for a ruling when you have a tricky scenario or a tricky transaction. You're not sure whether or not it's an allowable write-off. So what is allowable? Again, just as a recap, any reasonable current expense paid out or to be paid out to earn business income. That's the general rule. There are exceptions. There are limitations. Current expenses versus capital expenses is one thing that we need to cover as well. When a purchase is made, is it something that is going to be expensed in the current year, or does it need to be set up as an asset to be amortized over a number of years based again upon the allowable amounts in your jurisdiction? You need to ask your accountant about the threshold value of a purchase, because that may be one of the things that they are looking for in terms of whether or not you expense it in the current year or set it up as an asset. Asset amortization or depreciation over time is one way to, of course, expense these things. And again, that's a matter of taking it across a number of years, especially if it has been set up as an asset. So just a word about taxes. In our jurisdiction, if a business is too small to collect and remit sales tax, it can expense the net of taxes paid, less tax credits claimed. Now, by this I mean that if the company is paying for products or services and there's taxes applied, but they're not set up to collect and remit taxes themselves, there may be the potential of clawing back these taxes by means of a formula down the road, and in that case, you can only expense the amount of the purchase less what you would claim back as a tax credit.
Otherwise, the tax component of sales is separate from the revenue and expense stream, and by that I mean you become essentially a tax collection service, at least in our jurisdiction anyways. You collect taxes on behalf of the government, and you send it into government. Taxes collected are held in trust until they are remitted. In other words, you basically have a trust account set up, whether you or not you choose to set up a separate bank account for this, and you need to be able to hang on to that money and not spend it because it's realistically not your money. So bear that in mind. On the personal side, personal expenses should not be claimed as business expenses. You should be aware of this. If not, then you really must become aware of it, because when you are dealing with expenses for a company, if the boss or the manager or whoever makes purchases which involve personal use or items or services that are going to be used on a personal basis, this has to be subtracted. That's fair and that's legal. It's important for business owners making purchases through the business that are of a personal nature that you take care of that and attribute it to their owner's draw or a shareholder loan account or something of that nature. You need to separate this into the appropriate accounts, and you need to deal with it realistically that way so that you're not trying to claim expenses that are not for the business. Now, allowable write-offs. Let's look at what typically can be used, like advertising. Advertising is, again, something that most businesses need to do in order to be able to sell their product or service. It's an allowable expense, and again, this is something that I'm putting forward there as being applicable, I would think, in most jurisdictions. Bad debts. At some point, if you have customers that owe you money that you have no realistic expectation of getting that money, then you need to bad debt it. This is allowable, at least in our jurisdiction, as an expense, an allowable expense. Bank fees and merchant transaction fees. Yes, of course. Again, you need to set up bank accounts in order to be able to collect money and then pay out for expenses. Merchant transaction fees. Now, by this I mean for those of you that are taking care of businesses that use or accept debit or credit cards, there's usually transaction fees that are associated with that, and those are allowable write-offs. Bookkeeping, of course, one of my personal favorites. Yes, your cost or the cost of bookkeeping is a legitimate expense. Business taxes, fees, licenses, dues, memberships, and subscriptions. It's all a part of doing business, and yes, in most jurisdictions, all of these things should be allowable as expenses. Business use of home expenses. If you're dealing with a small business, or if you're in a small business of your own, and it's operating out of a house, there are allowances, at least in our jurisdiction, for a certain amount of the house expenses to be written off as allowable write-offs, and this is determined, again, in our jurisdiction by the amount of the home that's used and the time that it's being used for. There's formulas in place for this, and you really need to look into it if this is the situation that you're looking at. Capital cost allowance or depreciation expense. Again, going back to those assets that are set up, they can be expensed across years, and that amount is usually set by the accountant, but it's something that you need to be up to speed on and then expense it accordingly. And it's usually done as a year-end adjusting expense. Now, carrying on. Current or capital expenses. Certainly, again, if you're buying capital equipment or current products or services, they can be expensed. It's just a matter of doing it properly. Delivery, freight, and express. If you're looking at selling products, it has to get to the customer, whether it's on a store or whether you have to actually ship it to them. The shipping costs should be expensable, again, in most jurisdictions. Fuel costs, except for motor vehicles. Now, if you're looking at fuel for heating or whatever, that's certainly an expense for the business and can be expensed. There's a different setup for fuel for automobiles and how people go about charging for use of vehicles and vehicle expenses, and that we'll deal with in just a few moments. Insurance. Yep, it's a good idea to have insurance, and yes, that is an expense in most jurisdictions. Interest. If businesses have loans or lines of credit, the interest on them is usually an allowable expense, again, in most jurisdictions. Legal, accounting, and other professional fees, yes, it's a cost of doing business. It should be allowable as an expense, and it is in all jurisdictions that I'm aware of. Maintenance and repairs, of course, yes, again, just a cost of doing business. You got to keep things in good shape. Management and administration fees, yes, this is also legitimate and should be allowed for, and you can allow for that when you're writing off the expenses. Meals and entertainment, this is where it gets a little bit tricky. In our jurisdiction, only part of meals and entertainment is allowable, and this also has some leeway that can usually be explained better by the accountant based on your jurisdiction. Nevertheless, meals and entertainment are an allowable expense or an allowable write-off. You just have to be careful whether or not all of it is. Motor vehicle expenses. Yes, again, it's a cost of doing business, but how it gets taken care of is something that you need to be aware of. For instance, there's different rates or expense allowances that can apply in our jurisdiction, whether or not a business is a proprietorship or a partnership as opposed to a corporation. With corporations, for instance, it's an allowable reimbursement to the person supplying the vehicle by kilometers in our jurisdiction. Office expenses, stands to reason, yes, cost of doing business. Prepaid expenses for things like insurance, for instance, where you pay a lump sum fee up front and you amortize it across the months or whatever up to the point of the fiscal year end or whatever the time frame is that you're looking at. These are allowable. Property taxes, yes, another one is good to go. Rent, if you're renting a facility that you're doing your business out of, that is an allowable expense. Salaries, wages, and benefits, including employer contributions. Now, when I say this, I'm saying, of course, the salary or the wages and benefits that you pay out. But in some cases, for instance, here in Canada, the employer has to contribute an equal amount to the Canada Pension Plan and an amount equal to 1.4 times what the employee contributes to Workplace Safety Insurance Board payments or workers' compensation for injuries sustained on the job. Supplies, yes, stands to reason. Telephone, utilities, and internet, yes, of course. These are also costs of doing business. Travel, yeah, there's some restrictions here as well. At least that's what I'm aware of in some jurisdictions. You need to be careful here. You need to be up to speed and do your research. There will be others, and again, this is where you really need to do the research, and if you're at a loss as to whether or not it's allowable, check with your accountant, or if necessary, check with the government taxation agency. Now, there are limitations, as I mentioned, at least in our jurisdiction, on things like mileage. For instance, if you are a proprietorship and you're using your vehicle for business, you can expense the amount of the vehicle that's being used or expenses on the vehicle for the amount of time and distance that it's being traveled with for the business and business purposes. Meals and entertainment. Here, the rule of thumb is that for meals, you can expense up to 50% of it, but there are exceptions, and the same thing with entertainment. There are exceptions, and it depends on what you're doing as well. For instance, for a year-end Christmas party or something of that nature, it is allowable to be expensed at full rate, but again, you got to be careful. You got to really know your numbers and do your research when necessary. Home businesses, as I mentioned before, a certain part of the home can be used for business, and the expenses that are involved in maintaining that as a percentage of the total expenses of home maintenance can be allowable write-offs on the business. Leasing costs, depending on the kind of equipment or whatever it is you're leasing, there may be limitations there. You need to check. Vehicles, we've discussed that already. If it's a vehicle that is used exclusively for company business, it likely can be expensed at the full rate. If it's not, if it's a personal vehicle used for the company at times, then there are differences that apply. There may be others, things like disability-related expenses, convention expenses. In this neck of the woods, you're allowed to expense convention costs for 2 conventions a year that are related to the business that you're in and that are within a certain distance of the business and where the business operates. Allowable reserves, you're allowed to keep them and maybe even expense them, but again, that's something you definitely need to research for your jurisdiction. And health service plans, they can be expensed, but there may be limitations on how much as well. Do your research. Now, at the end of it all, what you want to do is have your chart of accounts reflect the allowable expenses for the business that you're doing the books for, to make it reflect the expense structure for the business, and that it takes care of all the allowable write-offs. Keep it simple, folks. That's my word on that.
Lots of food for thought here, right? Remember that any current expense that has been paid or will be paid to earn business income will generally qualify as a write-off, within given restrictions and limitations, of course. Clear as mud, right? Always remember to do your research based on the company that you're doing the books for, or the companies if that's the case, and make sure that you're up to speed as to what applies for their particular situation. Now, when in doubt, you can always touch base with the accountant as well. A good accountant will cooperate with you because it gives him or her a better set of books and a more accurate set of books, which helps their cause down the road when they're doing things like year-end taxes. If necessary, you need to go to the taxation agency for a proper ruling, and that can be done as well. Just keep that in mind and keep that in your back pocket. Being knowledgeable about all this and taking care of it on behalf of the company or companies that you're working for is what brings true value to what you do as a bookkeeper. Best of luck in all this. For Fiscal Integrity Group, I'm Herb Holst. Thanks for watching, and we'll see you next time.
Fiscal Integrity Group, your home for the advancement of bookkeeping and bookkeepers.